Good morning, everybody. Welcome to the game plan. Happy Monday. Hope everyone had a nice long weekend. So today here at Verified Investing, I want to go over the key levels that the market has run into. We're looking at a futures market on the S&P that is showing some signs of a little bit of weakness. But again, this is all sandwiched between more trade drama. So let's go over that right now. Basically Thursday night. So remember, the market's closed half day on Thursday. What we saw Thursday night was kind of headlines coming out about letters going out to various countries with tariff rates. All right. Now, Friday, the futures were open, right? Even though the stock market was down, the futures were open and futures fell about 40 to 45 points. But notice when that news was put out, it was put out Thursday night, the longest period before the stock market was to open again, before essentially we would get the markets reigniting. And the idea here is very clearly that the administration wants to put out the negative news with as much time to kind of digest and then eventually ignore it into the next market open. And we saw exactly that, right? Futures last night on Sunday night, we saw the markets opening lower, but only down about 20 points. So cutting the loss from Thursday and Friday in half and coming back again just down 20. So where are we right now? Let's flip over to the S&P 500 chart. If we take a look here, this is the futures, right? So you can see this was Friday's action right here. Friday, the markets were falling on this tariff news and trade news. This is where we opened at 6 o'clock on Sunday night, 6 p.m. Eastern time. Markets kind of trailed off, and then we floated up a little while ago, coming back in. But aside to say, essentially, if we look at the daily chart, we're down 24 points on the S&P futures. So a far cry away as the animal spirits, the taco trade, whatever you want to call it, is still fully intact in this market. Now, if we look at the daily chart, this is the S&P futures. But what I want to do is flip over to this chart because this is the S&P itself. And what we saw on Thursday before the holiday on Friday was that the S&P was up about 0.8%. But look at what it finally did. It finally ran into the scene of the crime. The scene of the crime, this upsloping trend line right here, which we broke, came here, only really a sideways consolidation period on the break, then retraced to the scene of the crime. And today, what are we seeing? We're seeing a rejection of that technical level. All right. So again, we're seeing that rejection right there of price on the S&P. Now, how much do we see a rejection on? That's up or to be determined. But we always look for multiple factors on the chart. And what we see here is that you have this low pivot connected to this high, and you also have X marking the spot. So you get two factors right there that were resistance going into today's open. And needless to say, again, a small pullback in the market. So the question we all have, right, is this just a small one-day pullback? Maybe not even one day. Maybe we turn positive. Or is it going to be a multi-day pullback? Is it going to be a steep pullback? We're going to find out. The one thing I will say, folks, is that valuations are now very, very stretched. And we're also coming into earnings season. So earnings season, again, guys, kicks off really in full next week with the financials. This week, we do have Delta Airlines, which should be interesting because we'll get some insight into how travel is going. We've heard a lot about travel slowing down. The COVID rush to travel is now over. Airlines are seeing a slowdown in travelers. So we've seen Delta Airlines stock come down quite a bit. In fact, let's jump over there and take a look at that chart because I do think it's worth taking a look at. So with the stock market at all-time highs, Delta was trading basically up here at $70, is now trading at $50 and change. Now, the one thing that gets my attention going into earnings is, number one, the sentiment on the airline stocks is relatively negative, right? And anytime you get negative sentiment, I'm always kind of thinking the opposite, like, oh, well, maybe we actually see a bullish result because the bar essentially is lowered. So always remember that. When a stock is trading closer to its 52-week lows going into earnings, the bar has been lowered, meaning analysts and investors expect kind of not so great numbers. It opens the door just a little bit for a earnings beat or a surprise. And so that always kind of makes me say, okay, well, now let me go to the chart and see if the chart has any sort of confirming signals. And what I saw here is very clearly you have a kind of a cup handle here, cup, and then a handle. And look at the handle here. This is a beautiful thing. If we break out our parallel channel tool, we can see that, look at this, guys. Right there, it's a perfect parallel. Low pivot, low pivot, low pivot, high pivot, high pivot, high pivot. And so listen, we know when it comes to earnings, there's no guarantees in any sort of investing, right? But this pattern, here's your cup handle. This is a bullish pattern. Now, granted, they don't report earnings till Thursday morning. So obviously we'd have to recheck in on this on Wednesday afternoon to make sure that nothing has changed in this pattern. But right now, this is a bullish pattern on Delta Airlines ahead of Thursday morning's earnings. And I love the fact that there's negativity here. The stock market, many stocks are near all-time highs, yet clearly you can see that Delta is quite a ways away from its all-time highs or its 52-week highs right up here. All right, let's jump back. I just kind of did a detour there. Let's jump back to the S&P. Again, keeping an eye on the S&P off of this kind of X marks the spot, retrace to the scene of the crime. Again, watching to see, we're going to pull back at the open, only about 20 points on the S&P. Does it start to become bigger? Okay, next up, the US dollar. The dollar is gaining a little bit of traction here. Now, the key on the dollar is it's going to run into resistance at 97.75. What we can see on this chart is there's a downsloping trend line here from this pivot high to this pivot low, and it goes right to this low, right to this low, and then we broke. So this technically is a retrace where you're going to, or at least we should assume, based on probability, that we're going to come back to resistance, and that's going to be a battle line for the bulls versus the bears on the US dollar. So watch the 97.75 level on the US dollar this week. Let's see, does it break above this line or does it get rejected? Odds favor a rejection. All right, next up, the 10-year yield. The 10-year yield attacking this trend line again. This is another classic case of the retrace to the scene of the crime. Here's your support, 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 each time bouncing, 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 kind of kissed here, bounced, and then broke. And here's your retrace. The last 2 days have tagged the retrace. So again, while you still factor in that the probability favors a rejection on rates, what we do want to monitor is how many times you hit this trend line. All right, now let me explain that. Let's go in a little bit more in depth on the educational side. You hit it on Thursday, and we hit it again today so far on Monday. That's okay. 2 hits of a trend line is the odds still favor a rejection. However, if you hit it 3 and 4 times, by the time you hit the 4th time, you then start to say, okay, now 50-50 chance of a break back above. If it hits a 5th time, you're now at 60-40, a 6th time, 70-30 for a break above. Now, listen, this is only hit twice, so the odds still greatly factor in a pullback here. That's the most likely outcome. But I just want to show you this, right? So if we look at this, 1, 2, 3, 4. So this was a 50-50. On 5, it was 60-40. And sure enough, we got a break. And then you come back up. And so again, just kind of pay attention to this stuff. It actually is very insightful for those of you that took advantage of the Winning Trader Series sale over the last week or two. You are going to learn this stuff even more in depth. And it really is eye-opening as you learn this stuff. So again, just keep that in mind. All right, Tesla. Oh, Tesla. So Tesla is falling today, trading at around 294. Notice again, 1, 2, 3. This was a 50-54. It's now below. It's going to be gapping below this line. We know that the odds of a break now, while not guaranteed, the odds of a break are 60-40. So 60% chance that it is going to break on today's gap down versus recover and recapture that line. We all know the news here, guys. Again, Elon Musk obviously creating a new party, and basically it's not the party itself. It's the loss of government contracts that's going to be associated and the negatives to his companies, right? So again, those are all issues there, and that's why the stock is trading down. Needless to say, sales continue to be pretty sluggish for Tesla cars as well. The self-driving, from what I've heard, has not been totally smooth, which is a small negative, although I think generally people would agree that anytime you launch something new, there's always going to be a few hiccups. But again, If we break, assuming we hold below, watch for confirmation. If we confirm, first support for me is going to be here at 274 Pierce. That's also this area of support. So notice this low coexists right here and really with this area right here as well. And if that breaks, then we start looking at these lower levels. But again, let's start with square one. Do we close below this line? Odds do favor it now in the charts. Semiconductors. We got to talk about the semiconductors. So semiconductors on Thursday, and again, I keep on referring to Thursday because remember the stock market was closed on Friday. Thursday was a half day. But very clearly, we ran into a dual factor resistance on the SMH. So here we have a double top, which pierced. That's normal to see pierce as a double top. In fact, it's almost unnatural to not see a pierce of a double top because they got to run the stops. You got to kind of fake out the bulls thinking it's a breakout, even if it's going to pull back. In addition, you have this trend line right here, which upslopes, and we tagged at the high on Friday or Thursday, excuse me. We tagged that level. So there's a lot of resistance here. It does favor, just like we were talking about probability-wise, we do favor a pullback on the semis. All right, so that kind of gives you a roundabout there on some of the stocks that are moving that I'm keeping an eye on today. I did want to talk about a new trend that I am noticing since the beginning of the next quarter, the third quarter of 2025, and that is money rotation out of large cap tech since the new quarter, and there are key stocks that are jumping on my radar. So let's take a look at a couple of these names here. KHC, look at this pattern. Love this downsloping wedge pattern. Look at the breakout. So if you look at this last day was the last day of the quarter. The breakout occurred on the first day of the next quarter, the third quarter of 2025. Follow through confirmed. Now we're seeing a small pullback. Look for maybe a retrace, kind of consolidation bull flag. I think this goes higher. Again, these are companies like Kraft Heinz. Even if we have a recession at some point, who's going to really benefit or maybe not be affected? Probably like a Kraft Heinz, right? So this could be the start of something where money flow is starting to find out these names. Another one, Merck. Merck here, long down sloping trend line. Again, this is kind of an old trusty that would do probably decently well in a recession. And sure enough, it breaks out on the first day of the new quarter. Didn't confirm yet, but let's watch to see, does this trend line hold here? But I like this. I like this chart. I like KHC. There's a bunch of other ones. If you go through these kind of older school names that aren't so sexy, right? They're much more apt to be at the low end of the charts because money has not sought out them. Money's been focusing on semiconductors, AI plays. I mean, you name it. All of this stuff has been hot. But now we're starting to see a little rotation of capital, and these things have been beaten down pretty precipitously, all right? So again, those are some of the ones that I'm watching over the next couple weeks. I do have some positions in some of these folks, some with options as well in the options service. All right, let's go over to Bitcoin and take a look at where Bitcoin stands. So Bitcoin, guys, I was looking at this longer-term trend line here. I still think this is an amazing chart, right? So this is your monthly chart on Bitcoin, going back to the 2017 bull market high, 2021 first high, 2021 second high, 2024 high, 2025 high. So the reason I show this is because, you know, a lot of times on social media, we hear all the crazy predictions. And listen, at some point, maybe when people make crazy predictions, inevitably one eventually turns out to be right. Is it going to be this time? We don't know. What I do know is I can read a chart. And the simplicity of it says that until we break this trend line, this is a cap. Think of it as a ceiling, right? A ceiling where price is struggling to get above. It was the ceiling in 2017 and 2021. It clearly showed the ceiling. 2024, the ceiling, boom, we had that correction down to 74,000. And then 2025. Now, listen, if you break above this, sure. At that point, we could go to 150, 200,000. That's possible. But as long as this trend line holds on Bitcoin, I have to respect it. Listen, we all have our kind of underlying emotional hopes. All right. I'm a big fan of Bitcoin longer term, but I'm also at the core a chartist. All right. A technician of the charts where I have to take that into account. Right. It's kind of like walking in front of a bus and like saying, oh, the bus won't hit me, even though it's going 60 miles an hour and only like 20 feet away from me. It's like, well, let me use my logic here. If I just factor in the speed times the distance or the distance between me and this, chances are it's going to hit. Like, you can't ignore that, right? But a lot of people, because of emotion, do. I'm all for Bitcoin eventually going higher and higher, but you got to respect that line. Again, anywhere between 113 to 115, that's that upsloping trend line. All right, so that's really what I wanted to focus today on Bitcoin in the shorter term. Really, that's the big level to beat. Next up, let's take a look at gold. And if we look at gold here, let's flip back to the daily chart. Gold, after closing below, breaks back above, never confirmed. Here it's coming back below again. Now, this is interesting. Here you hit the level. Here you closed below the level but didn't confirm. Are you going to close below this time and confirm? I actually think you do. And I'm going to tell you why, guys. So this is something I've learned from studying charts now for 26 years, is that the markets are like, I don't know what would be a good term, maybe like a child in a way, where they test your limits. And they test it first by touching the line. Then they go a little bit beyond the line, right? And if you don't rebuke them, if you don't, and then they go and they close on the other side, right? And then they finally confirm. My point being is that, and again, maybe that's not the best analogy, but the point being is that the market's testing the line, piercing, so a little bit further of a test. And when you see this happening where it's kind of hitting, then piercing and going below, and then if you close below, I would assume it's going to confirm. Now, listen, is that the end of gold? No, I would still be unbelievably bullish on gold. In fact, look at this. If we adjust this trend line down from this high here to this low here, what does it create? What does that create? Look, parallel. So you could even trade down to around 33,075, and this line is going lower, and this would still be bullish consolidation, right? Let me just show you guys this here by drawing it out. Up, down, right? Then back up, then down. And then the idea is you could still go here and you'd still be at this parallel and you could still favor a breakout. And that's what I think is ultimately going to happen. So I would generally look at this and say, okay, short-term gold or weakness, granted, we haven't confirmed below this line. But again, it wouldn't shock me to see kind of a flush out in gold here. And then after that, I think you start to make your way back up and eventually hit new all-time highs. Now, silver was trying to break out on Thursday, excuse me. It closed above and getting rejected, almost like gold in reverse, right? Here it tests the line. Here it closes above but doesn't confirm. Let's see what happens here. Classic parallel bullish consolidation. Watch to see. I still remain bullish on gold because this pattern remains bullish. But again, let's watch and see what happens here. All right, back to oil. Here we go. Last week, again, I took my profits on my long oil here. It pulled back. Now it's pushing back up. OPEC, by the way, over the weekend, OPEC Plus announcing they would add another something like 500,000 barrels of oil to the market. The market opened lower, but is since coming back up. Again, that's very common where people have already priced that in. They kind of knew what OPEC Plus was going to do there. So price is basically back to flat to positive here. Overall, no trade for me. I am going to continue to monitor the potential for a bear flag formation here. So if we look at this, kind of a big move down inside bar here. Still not a mature pattern yet, but I will keep an eye on it there. And then lastly, natural gas, which hasn't really given me a trade since over here when we went long in the service, in the commodity service that I run for a quick move up. But you can see it keeps trying to break here. Low pivot, pierce, and now pierce again, but it's trying to recapture the line. Watch to see where it closes today. A break below with confirmation. Easily you trade down to about 308, 309 area, maybe even lower. But that's the kind of the zone that I'm watching for now. But obviously depending on this line breaking right here. All right, guys. So again, just to rehash here, S&P futures are trading down by about 23 to 24 points going into the open. That's a far cry from where the futures were down about 43 on Friday when we initially got some of the trade news on tariffs and so forth. But again, let's watch to see. The market has been resilient, although the S&P is into and hit on Thursday some major levels. All right, you guys are awesome. Thank you so much for tuning in. I hope you learned a few things in here, plus know some levels now to watch on some of your favorite stocks or commodities or crypto. You guys have a great one. Again, thanks for being supporters of VerifiedInvesting.com.